Good morning to all traders and welcome to another marketsinsights video, September 23rd, the day after FOMC. Is it to be remembered? Well, not the day, but yesterday, yes, because finally we've got some more guidance, or maybe clarity, I would say, from Fed Chair Powell. They are going to go for a moderate tapering, as the ECB has announced actually first. And the chances of interest rate hikes, though, are much higher than they are with the ECB. The ECB is not, they're not really thinking of doing anything related, to be fair, and it wouldn't be really clever to do so. So we're going to have a quick look on how this changes our view. And technically speaking, we shouldn't be really basing our analysis on macros. That's why I'm still remaining unchanged with the main scenario for the index. We need to look at technical levels and make our decisions. And of course, that will include having a look at the euro, pound, also oil, and the S&P. So starting off with the DXY, and I'm just thinking out loud here, guys. I was looking at this, that we didn't really get to the 90%. So that can still be considered as an ABC, 1, 2, 3, 4, 5, right? However, this is true. So it could still be some W, X, and Y structure over here. And this is, of course, the alternative. And why could that be the case? Because we say that a flat usually has to do 90% wave B of A. But in Forex, guys, 78.6 can be used, okay, which is over here. So we've done that already. Now, we didn't get to 90, though. So there's still a bit of a 50-50 here, right? For that reason, we can still assume this is 1 and 2, because wave 2 usually goes up to like 85%, okay, when we have a deep correction, because this is considered to be the basing process. It is above the 79%, 78.6, and that is usually where wave B is supposed to end compared to A if we have an ABC correction. So maybe that's not an ABC correction, okay? So our main, with my main scenario over here, that this is 1 and 2, we're gonna get 3, 4, and 5. Without being biased by FOMC, it's not how Elliott waves are done. 1, 2, 3, 4, and 5. Unfortunately, I cannot see the volumes, which I do not understand why TradingView does not allow me to have volumes over here on DXY. But depending on volumes, obviously, if this is an impulse, then we could be on 1, 2, 3, 4, and 5 here as well. Okay. Which brings me to, and let's go out a little bit on the 4 hours. And I want you to see something here, guys. We're talking for a W, X, and Y, okay? And we were looking for this level to be reached at some point anyway. Now, this is wave 4, right? So can you imagine if that would be some sort of 1, 2, obviously a bit lower down here, 3, 4, and 5? Because we could literally get something like this and then correct lower down. That would be a triangle in wave 4, okay? But also, and as we look at this structure now, we've got here a correction and a correction. And although we have done a fresh high, okay, we definitely didn't get to the channel top, I think. Yeah, you see, there is still a bit more space to move up. Plus, that can be A, B, and C, okay? Because we've placed our B here, but our B may be not finished yet, okay? And our B, apart from a triangle here, could also be a flat over here, okay? Because if you see this as ABC and ABC, 1, 2, 3, 4, 5, our B could be here, which means that might be A, that might be B, we might get 1, 2, 3, 4, and 5 for C. And that would be our wave 4. So I just wanted to get zoomed out version for you guys, so that we have a good understanding of what we can expect from the markets. Because currently, as you see, this structure over here can be a bit confusing, okay? There is no clear evidence on which one is impulsive and which one is corrective, or can be, okay? We just go with 4 is done, and we're gonna move down, and that will be the correction high first. This is our main. The moment we break 90, okay, we're gonna bring the flat back in. Okay, we still see more downside in the short term. However, that can extend up to 138.2. So we can literally see a fresh high, and that is going to be a regular, either running flat or expanding flat, and then up in 4, and then continue lower down. That's the alternative, okay, the first one. Now, the second alternative, as I said before, is that we'll look a little bit further back, okay, and we are looking at this as first wave A. We're looking at B as a flat, and we're expecting C, so more upside in the short to medium term, and perhaps even up to 94.72, which is where this impulse to the downside is going to be invalidated, if I'm not mistaken. That might be my wave 1, yeah, in the primary degree. Anyway, I will have to go back on the daily. Anyway, it's an important level, okay? That's for the DXY. Okay, now on the euro dollar, I have changed my main scenario simply because the 90 was reached over here, okay? So if we look at this, you see the 90, that's done. So that is quite of a dip to consider it as an impulse, as a correction, you know, like we had 1 and 2, right? This as 2 is very deep. I mean, we did that on gold, but you know, that took a few changes as well, if you remember. So how am I looking at this change now, guys? Okay, I'm looking at this as 1 and 2, 3 and 4 and 5. Although I never like to see corrections that they are so much different in the same degree, because it doesn't happen really often. This, just to get a better perspective, well, it doesn't look like I can see it. Hold on. This correction lasted 4 days, and was 1%. Now, this correction over here, it's 14 days, and it's like 210 up. Okay, so the range is quite big over here compared to this and the time frame. But 14 over 4 is like 3.5 or something more. We can extend sometimes, you know, we can allow that to go up to 6 times, even 10 times in the same degree. But usually, especially in Forex, traditional markets, we don't see these take place. So what we ought to do is do a base channel over here, but we're going to use wave 3 as the acceleration side. This is 1, you know, it could be a case where this is my 1, yeah. This is my 2, this is my 3, this is my 4, this is my 5, but that would be some sort of, you know, like ending diagonal, open-ending diagonal. Looks a bit like a very silly one, to be fair. So that's why I'm going with this, which means wave 2 comes in lower. We might get a fresh low, guys, here, only just the fresh low, and continue higher, okay? But we also might just do this, let me go out on the 4-hour, a double 4 over here, and then continue higher, okay? Don't forget that we are looking to be in wave 2 or B, okay? And this is a correction for us. 1, 2, 3, 4, and 5, okay? So because we stopped at 90% over here, since this is seen as a flat, okay? We can only assume we can go up to 1.1666. You see this level. Nobody likes it, but whatever, that's the number. And why is that? I mean, it's not a rule, it's a guideline, but usually because this is a regular flat, okay, regular flats are supposed to end anywhere between 90 and 105 of wave A. In Forex, we can go up to 78 as well. So with that being done already, it might just be a double bottom here and we'll continue up, okay? Otherwise, if we continue lower, then we will have a regular flat with an extended wave C, but it cannot really extend much, just to give you a heads up, okay? So double four, perhaps 116, very nice round level as well. That's what I'm looking here. And the reason I changed the scenario to main, I explained. Now GBPUSD, we've changed the main few sessions back, and it seems that it's been working fine since. We were looking at a flat over here. It's a running variation actually, A, B, and C. Yeah, open diagonal here. Still doesn't look like it's the perfect shape or structure, but you know, we're looking for a potential 5-wave leg to end shortly. Maybe 135 is our level, okay, because this is the 61.8 Fibonacci extension of waves A and B over here, or we might get down to this level over here, which is the minor wave 1. However, I want to tell you that virtually and technically speaking, we could go all the way down to this level over here. Hold on. 126.63. Yeah, without being invalidated. Okay. This is an ABC though, I will remind you. So usually we have the equality between waves A and C. That means 132.50 might be the low. But if we want to see that continue higher, because we are currently moving in a corrective leg in wave 4, we would prefer to stay above the minor wave 1. It's the internal structure, and that being above it means that we are more bullish or biased to the upside. So one more leg down, it looks like to me it's very likely. Where to, one might ask? Well, simply Fibo 1, 2, 3. It looks like we've had 1, 2, 3, 4, and 5 internally done as well. Okay. So 1 and 2, 3 and 4, and one more leg down. Where are we gonna go? Am I seeing this right? Did I pull the wrong? No, I did pull the right one. Okay. 1, 2, and 3, and 4. We'll look always for 38.2 when we do this, when we use this projection method, which is 135.73, the previous low, and also the 61.8, which is really coinciding with the 135 here. Yeah. Which makes a very nice cluster. So 135 is very attractive. Now let's go quickly on oil. On oil, we don't have much to talk about. Okay, it's a bit more of a situation that the main that we talked about over the past few days about this being a leading diagonal is coming in nicely in place. So the rejection was in down here. We crossed back above 71, and it looks like we might do another ABC here for a flat. From there, we can expect prices to decline and then move all the way up again. Okay. So for now, and as you remember, because we look at oil pretty much every day, this can also be an ABC, right? But with these interactions over here, it's very unlikely to be. So the alternative, the first alternative will be this is 1 and 2, and we start a new impulsive move internally, okay? And that's going to be part of the bigger structure over here. If we have 1 and 2, then our 3 will be higher than the 4 and the 5. So internally we've got 1 and 2. Yeah, I am sure that makes sense. Now, if we start turning lower again, do know that we cannot get truncations in leading diagonals. So we've got to break above that level to validate the leading diagonal. If we don't and we start moving lower down, then most likely that's an ABC, and that's 1 and 2. We're going to get 3, 4, and 5. For A, B, and then C, that's going to be W, X, Y, X, Z, triple zigzag. Or might say better, triple 3. S&P, because we've got to talk about it, it's very, very related to the sort of financial risks and economic global risk, I would say, that originates from China, plus the Fed. Okay, I'm not convinced. I'm not convinced because this is corrective. Okay, I think we're going to get more downside over here, guys, regardless of what the Fed says and all that stuff. Don't forget the risks for, from China are still relatively high. The fact that the China stepped in, and obviously they would, does not mean that we are in a safe place. It means that temporarily, they've taken some measures. So 1, 2, 3, 4, 5 for A, then B, and then C is very likely to me, perhaps down to the 4K. But I'll tell you also this, okay? As long as we are below 44.30, if we cross back above, then things are going to change, because this could be seen as an ABC, okay? Which means that that's going to be probably a multi-structural move to the upside, or a leading diagonal. Then we'll get 2, 3, 4, and 5. But as I said in yesterday's video, corrections that come following an ending diagonal usually correct down to the beginning of the ending diagonal, at least. That's near the 4K. Okay, so let's pay attention to all those numbers and the levels that we've talked about, and use them as guidelines for potential trades. Yeah. Thank you for watching once again. If you have questions, go ahead and ask in our YouTube section, and I will get back to you as soon as I can. Take care, and we'll speak again tomorrow.